CNBC TV 18, celebrating 15 years of leadership.
Good evening. You're watching Markets Today, and I'm Sonia Shenoy. With me is Anuj Singhal. Today was a choppy day of trade. By the time we wound up the day, we ended about 0.2% lower. But give and take everything, after a great run that we had on Friday, we by and large held on to the gains. So just a shy below that 8,400 level.
Indeed, Sonia. Nothing to complain about. In the morning we spoke about this zone of 8,400 to 8,450, and that it would take some doing for the Nifty to cross that. And that's how it panned out, Sonia. The market turned from 84.45 or so. And the sense you get is that this resistance zone would take some maybe big FI inflows or some big positive news for market to overcome this hurdle. But essentially the market still remains firmly in control of the bulls. It's just that we had 5 or 6 days of continuous gains. So today there was just a bit of profit booking. All said and done, the market is still in fine fettle. The mid-cap index is almost at life highs. Most of the indices are almost at life highs, except IT, which is the problem point for the market. Really, it has been the problem point for some time now. The market is fine, really.
All right, so on that note, let's take our viewers through all the top headlines. It was a choppy day for the market that ended with a marginal negative bias. Mid-caps ended the day absolutely flat, with the market breadth at 1:1 today. Micheal Kurtz, Global Head of Equity Strategy at Nomura, told CNBC TV 18 that they are highly optimistic on India in 2015. Much of the good news is yet to play out, and India is the largest overweight in the Asia portfolio.
Well, Maruti was one of the top gainers on the Nifty after CLSA retains the auto major as one of its top picks in 2015 with a target price of 4,400 rupees per share. Ashok Leyland too gained 9% reacting to its sales figure for December. The company reported 48% jump in total sales year on year.
And in other stocks today, L&T rallied after Citi upgraded the stock to a buy with a target price of 18.49, while Deepak Fertilizers reduced its stake in Mangalore Chemicals, giving rise to debate that the company could be giving up on the race to buy Mangalore Chemicals. Well, those are all the top headlines, and here are the experts that we have lined up for you on the show tonight. Hiren Ved of Alchemy Capital Management will give us his outlook on the markets in 2015. Andrew Holland of Ambit Investment Advisors will tell us what are the key triggers to watch out for. And as always, Sudarshan Sukhani will join in to talk about the technicals of the market. All right, but first up, let's tell you about the market today. As we pointed out, it was by and large a choppy session of trade, but just some amount of profit taking, nothing great to worry about. Still holding on to most of our gains that we saw on Friday. The mid-cap index was absolutely flat, but there was quite a bit of buying, Anuj, in the frontliners, especially in the auto space, in the infrastructure space. So clearly, domestic cyclical saw a lot of favor.
Yeah, that was the key. Autos did well. Maruti, Tata Motors, Hero MotoCorp, all these stocks were higher. Tata Steel, Larsen & Toubro, IDFC. So as Sonia pointed out, clearly this was a domestic story and corroborated by the fact that IT was the top loser. So export story was not playing out despite all the rupee depreciation that we have seen. Tech Mahindra, TCS, Infosys, they were all lower in trade today. The pressure for the market today came from these three heavyweights actually: HDFC, Reliance and Bharti Airtel. HDFC in particular dragged the market quite a bit. That was one of your top gainers on Friday, but today was one of the top losers. And in the mid-cap space, the stocks that really stood out, Ashok Leyland and GSPL. Big gains in both these stocks. On the losing side, IRB Infra had some problems along with Pipavav and Idea. But all in all, Sonia, still a decent day for the market.
It was. In fact, let's get you some market perspective now. We spoke to Hiren Ved, Director and CIO of Alchemy Capital Management earlier in the day, and he expects 2015 to be a good year for Indian equities. In fact, he expects to see double-digit returns this year as well. Take a look.
Overall, 2015 should be a good year. I think we've seen a lot of macro positives get built into the market in terms of lower oil and commodity prices. Hopefully on the back of that we should see sometime in 2015 interest rates start to come down, though they're already starting to reflect in the bond yields. And I think you should start seeing earnings pick up because maybe not this quarter, but starting from next quarter onwards. It's difficult to say whether will it in terms of percentage returns give the same returns or not, but a lot would depend on the cost of capital and interest rates, and also how earnings pan out. But I think it would suffice to say that we should have a good double-digit return year. I don't think markets are trading at very expensive multiples. I mean, we are trading at about 16, 17 times 1 year forward earnings. So we are at kind of average valuations. We are not very cheap. We are not very expensive either. It would be fair to say that this could be the year where the economy starts to turn around. Whether you should blanket play all the economy sectors is to be seen, because I think that there are still companies out there and sectors which are still highly leveraged, and the balance sheets are not yet repaired. And I think that balance sheet repair process is still underway. It's going to take a little bit of time before that gets sorted out.
All right. In fact, the market is focusing on companies where balance sheet repairing could be a big issue, and the stocks have seen quite a bit of activity over there. But let's talk about today's trade. Here's Nigel with a quick recap of all the derivatives market action today. Nigel.
Well, though the Nifty saw considerable amount of profit booking from the top, it came off close to around 50 points from the top. It appears that the base for the Nifty now has lifted to around that 8,000 to around 8,200 odd mark. I say this because in today's trading session, we saw a fair bit of shedding at around that 7,900 put, while the highest open interest lies at around that 8,000 put, while the second highest open interest comes in at around the 8,200 put. So what this is telling you is that a firm base is at that 8,000 mark, while in fact any kind of dip towards that 8,200 level should see some kind of buying. The 8,300 put, that one was fairly active in today's trade. The premium is roughly around 60 bucks. So traders that are writing this particular strike, their stop loss comes in at around 8,250. The 8,700 call as well as the 8,600 call, mixed action is seen at both these two strikes. Remember, even in today's trading session, when the Nifty went to around that 8,450 odd mark, from there we saw a considerable amount of selling pressure, indicating that that's a resistance area, 8,450 to around that 8,500 odd mark. Individual stocks are on focus today. Even in a weak market, we saw some big buying on a couple of counters. Ashok Leyland as well as Apollo Tyres, big buying was seen on both those two counters, while in fact Unitech as well as HDI, both those two high beta stocks, they came in for a bit of a short covering bounce. RB Infra, the stock fell on very, very high volumes. Big fresh shorts were seen on that particular counter, while in fact Idea is the other stock that saw a bit of a bump up in the last few trading sessions, but that one returned to the shorting list in today's trade.
All right, Nigel, thanks a lot for that. Well, Sonia had a marathon day today, both inside the studio and outside the studio. A lot of her stocks were doing well. Auto stocks clearly a flavor of the day. So Sonia, both Leyland and Maruti doing well, and both had reasons actually.
Yes, in fact, let me start off with Maruti, because that was the biggest gainer on the index today, and that after CLSA has come out with a very aggressive target price and reiterated Maruti as their top pick in 2015. In fact, they believe that there is a very big margin expansion potential, so they have forecasted that Maruti's margins will go up from 12% currently to about 17% in FY17, and that's because of multiple triggers. They have a lot of pricing power, new products that are getting launched, etc. Ashok Leyland was the other big gainer today, up almost about 9%. That's on the back of very strong sales numbers that it saw in the month of December. The MHCV sales have gone up 80%, a clear indication that there is a turnaround in play.
Indeed, and clearly one of the stocks of last year and still doing well in trade. That's Ashok Leyland. But let's move on. UK-based healthcare group Bupa today announced that it will hike stake in Max Bupa from 26% to 49%. Now, this makes it one of the first companies in India to benefit from the proposed increased limit for FDI in insurance. Ekta Batra has the details.
Well, in what has been one of the first deals which has been announced post the insurance ordinance going through, Bupa has decided to increase its stake to 49% from the current 26% in Max Bupa. Basically, Max Bupa is the health insurance business of Max India, where Max India holds 74% and the British insurer Bupa holds 26% currently. Some more details: it was launched in 2010 and Max Bupa has become the 7th largest private health insurer in India with a customer base of around 2 million across India. Initially, when the news was announced and it was just agency reports, the stock spiked up to a gain of around 6% but managed to come off the day's high. So what were the valuations and where did the disappointment lie? I spoke to a couple of analysts, and what they had to say is basically that Bupa has a call option in the joint venture, hence the valuations are predetermined. The valuation is estimated to be around 1 time capital infused, and the capital infused is estimated to be around 720 crores from both the companies together. So the additional 23% that Bupa will be acquiring is estimated to be valued at around 170 to 180 crores. That's what Max India will receive. Now, is this a raw deal? Most of the analysts don't think so. It's not estimated to be a raw deal because the company, this insurance business, the health insurance business, is still expected to be loss-making as opposed to the life insurance business, which has much more better prospects according to analysts.
All right, Ekta, thanks for that. Well, moving on, we told you first in November, and now it's official. After months of negotiation, the deal between NTT and Tata Sons has hit a roadblock. With the Tata Sons unable to buy back the stake, NTT has decided to now file for arbitration. Kritika Saxena is here to give us all the details. Kritika, what was the main bone of contention in this one?
So, Sonia, to understand the issues, we need to understand the shareholder agreement that was signed in March 2009. Essentially, as per the shareholder agreement, entity had the option to buy, to sell its stake, there is a 26.5% stake in Tata Teleservices to the Tata Sons at a predetermined price, which was around 50% of the acquisition price. Now, that works out to around 7,250 crore rupees, or at a fair market price, whichever is higher. Now, given the position that Tata Teleservices is at, given its debt, given its the losses that it is making over the last 2 to 3 years, and given the challenges in the telecom environment, the overall market value of the company has eroded. So currently that 7,250 crore rupees basically works out to be 60% higher than what the market value is. That is what analysts are pegging. So that really was the main bone of contention, and the reason why Tata Teleservices wasn't able to buy out that stake despite entity exercising its option back in July. So they had actually given them time from April to July. They waited for another 6 months, but now, since there hasn't been any clarity that TTSL or the Tata Sons are buying out the stake or have found a buyer, they are going ahead and they filed a case in the London International Arbitration Court. Sonia, the big question mark is Tata Sons seems to say that they will commit this agreement and that they are waiting for a response for the RBI. So maybe a hint there possibly that there could be a buyer around the corner, but let's wait and watch out.
All right, Kritika, thanks a lot for that. Well, let's bring in a global voice now. Micheal Kurtz, Chief Asia Equity Strategist of Nomura, is highly optimistic on India in 2015 and calls it the top bet in the Asia portfolio.
We are very optimistic on India for 2015. I think that in some sense that much of the story really has yet to play out. Much of the good story is still in front of us in the year ahead, and India, in fact, is now the largest overweight amongst our recommended overweights in the Asia-Pacific region for the year ahead.
Time for a break now, but coming up, Sudarshan Sukhani joins in for a technical chat, and we'll also get you some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.